Hey, what's up traders? This is Taylor Horton, and this is the free video for Friday, February 18th. So happy Friday, we have made it through another week. Quite the volatile week here. So today was monthly expiration, we had the Fed minutes earlier this week, and you got the news headlines with Ukraine and Russia. But all in all here, we didn't really go anywhere. The IWM closes today basically back at Monday's low. The S&P 500 closes today a little bit under Monday's low, and the QQQ with a close under Monday's low as well. So pretty much all you got this week was your pop-up towards your falling 21 EMA, and everything kind of just rolls right back over here into the long weekend. So keep that in mind. The market, unfortunately, is closed on Monday for President's Day of all things. I'd much rather trade on Monday, but different discussion for another time. So pretty good pop earlier in the week. It doesn't change anything though as far as the structure goes. So my game plan as a swing trader is always based on the current structure of the market. And in my opinion, the current structure here points towards more downside to come. And it's kind of like a monthly chart down to a daily chart shift that we're starting to see here. So if you look at the monthly chart of the QQQ, this monthly squeeze fires back in basically March, April of last year. This of 2020 rather. This monthly squeeze is just, in a nutshell, it's your trend. It's your source of momentum, and that squeeze is basically done. You can see the loss of momentum here. So the squeeze loses momentum, but not just momentum. This is our first weekly close under the monthly 8 EMA. So that certainly is a shift of structure, shift of momentum. And then if you check out the weekly chart here, 2020 and 2021, we're just riding that momentum, and every pullback just takes you into weekly support. So it's all perfect trend. We push, we fall back to the 21 EMA, and typically that's where we're looking to buy the dip. Now your weekly chart has shifted. We're no longer above the moving averages. The 8 EMA and the 21 EMA are starting to point towards the downside. And now you have the first negative histogram here on the squeeze since back, pre-COVID, back in March and April. And it's the same thing here for the S&P. The monthly squeeze has lost momentum. This week is our first time closing under the monthly 8 EMA, and your weekly chart has pretty much just completely shifted here. Now we're under the moving average, and there's your first negative histogram since COVID. And then I think another interesting chart is the volatility index. And if you look at the weekly chart here, this bad boy is certainly starting to build up some bullish momentum as well. So things could change next week. The VIX could die down. The indexes could find themselves back above the 21 EMAs. As long as that doesn't happen, so if the structure remains bearish, I'm looking to short any bounces here. And we kind of came into this week looking for that game plan. Into monthly expiration, can we get a strong bounce here to short? You had Tuesday's little pop, but we didn't have much luck as far as getting that nice bounce. What I would like to do, and it's all looking a little bit unlikely right now, at least in the short term, but what I would look to do here is just try to short these indexes on any strong bounce towards the weekly 21 EMA. So I would short the IWM up around 209, 210. I'd like to short the QQQ. Short that around 360 to 370, and we might not get the bounce. But in an uptrend, typically that flush into the weekly 21 is going to be one of your better buying opportunities. So when I look at this current market and I'm thinking we could go into a downtrend, typically your best shorting opportunity is going to be that aggressive rally back into the weekly moving averages. So see if that can unfold here next week. We do have a trade in the IWM right now, which is a March 25th 185 short strike call credit spread, and some pretty good risk reward here. So let's kind of look at this into say March 25th. And I've got this on 50 contracts, but risking about $3,600. And with a target down to 170, there's a potential on this trade to make about $20,000 of profit. So in my book, risking $3,500 to make potentially $20,000 on what I feel is a pretty high probability move, based on structure, based on the weekly squeeze. I certainly think into March and April, you could get your IWM down here towards that monthly 200 SMA. So any bounces next week, guys, I'm looking to add to the IWM short. I think the Qs are fair game. I think the S&P 500 can catch that fade. And then names like Amazon. You know, actually, Amazon's kind of the ideal short here. You're under the weekly moving averages. You have a negative histogram, no stacked DMAs, but there's your bounce. So really the last 2 to 3 weeks here, I think Amazon's given us a good opportunity to short this thing right under the weekly moving average. In terms of trading options, there's a lot of benefit here to waiting for that strength to short. So if you're trying to do a call credit spread, that rally into the weekly 21 brings all kinds of premium back into the calls. They get nice and juicy for you. And obviously, on a big strong bounce, your put debit spreads get cheaper. But I think Amazon's a potential short here. I mean, to keep things simple, the only group that looks good to me right now is the energy/oil group. So XLE, you got CL here, names like Devon, names like EOG. Still some good structure in your energy. So if you are looking to be bullish in a pretty sketchy market here, I think energy is most likely your best shot. But the game plan I'm trying to work is just to focus on the indexes, a focus on trend, structure, and momentum, all of which I think takes us lower into March and April. So that's what I got for you guys here today. As a reminder, the market sadly is closed this coming Monday, so we got a 3-day weekend. But I hope you use it wisely, spend some time with family, relax and recharge, and we'll be seeing you next week. So thank you as always for watching. If you haven't already, go on ahead and subscribe, and we'll see you in the next one.
What's up, traders? This is Taylor from Simpler Trading. I wanted to thank you for watching our video, and if you liked the video, go on ahead and comment down below, hit that like button, and make sure you're subscribed and hit that bell icon to get a notification anytime we upload our next video. And of course, if you want to watch us trade live in real time with our own money, check us out at simplertrading.com. Until then, trade safe, and I'll catch you in the next video.